And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Another beautiful CPI Tuesday. And boy, we have a lot to talk about today. Today's one of those days, if you were going to follow the markets, you might want to check in on your cryptos. You might want to check in on your stocks because the bears are out. The Darth Maul candle is out. Liquidating people to the downside as we speak. And what happened following up from yesterday's video, we said this, look, if CPI comes out hotter than expected, likely the markets go down. If CPI came out lower than expected, which the expectation was 8.1%, we came out at 8.3, higher than the expectation. And with these Federal Reserve meetings and with the CPI release dates, it's very, very important to understand something, that it's not actually what happens that, well, it's a combination of both. So you have the expectation versus the reality of what happens. So the expectation was 8.1%. We came out at 8.3. So it pretty much cemented the deal that the Fed is going to raise rates by another 75 basis points, bringing the federal funds rate above 3% going into next month. And I did have it up here. I guess the screen is reloading. We're currently at 2.25 to 2.5. If they raise it 75 basis points, that is not going to look good coming in for mortgages and real estate going forward. Again, you know, if you want a 30-year fixed rate, they're talking about 6% right now. Or actually, I talked to a buddy of mine this morning at the gym. He's a real estate guy and buys and sells properties all day long. And he got a quote yesterday at 6.75%. So you can only imagine, if you're trying to buy a home right now, what that is doing to the amount of home that you can actually buy. Home prices will have to come down with another rate hike at the end of this month. Again, the Fed, the FOMC meeting is going to be on the 21st and the 22nd of this month, where they will be deciding the fate of the US dollar. And we also said this from yesterday, that the dollar had some gaps that wanted to get filled. Gaps always like to get filled in the futures market, in the stock market, and with good old Dixie right here. And this was one gap we talked about. Hey, if we shot through that, very likely going to come up and test this next gap. If we do shoot through there, very, very likely there's going to be some more pain in the markets in the days to come. A bullish dollar is not good for risk assets, especially the NASDAQ, which is down 4% today. And that was another thing we brought up yesterday, is that very, very likely this gap was going to get tested. We are shooting through it at the moment on the 4-hour and confirming probably several drives of hidden bearish divergence. Again, this is going to be the 2-drive variety. Should give you a shot to the bottom side of the range, or more like somewhere around 12,000 bucks. Revisit those lows, and that is 2 drives. That confirmed today on the 4-hour time frame. What else do we have on the daily time frame? And we did say this as well, is, you know, very, very likely the bull traps come in at the 618 fib. And where did we get to? Right to the 618 yesterday and rejected. So any kind of a closure back below 12,319, I do believe we will break this guy to the downside. And the next target will be at 10,000, call it 11,000 bucks right here. And that'll be new lows on the daily time frame, confirming the reversal on the daily trend, which we did get a higher low and a higher high. And now we just got a lower low and another, well, this would be a lower low and a lower high as well. So that was a good tip off there as well. Don't fight the daily trend. Okay, what else do we want to bring up on the dollar here? This will be a bullish engulfing candle, very likely to anywhere, closes anywhere above here, and that would represent continuation to the upside. We said very likely going to get a test down to the green 55, but hey, close enough is close enough. And again, we did say those gaps were going to get filled not only on the NASDAQ, the S&P, and the dollar, but the Dow didn't have any gaps, and the Dow is looking pretty bearish. There was a gap coming back from here, but it was already filled. Never mind. So now that we got that out of the way, let's get on to Bitcoin, and we will be covering some Bitcoin news at the end of the session here today. But want to get into the price action, the time frames to rule them all. And I had, had a little bit of a question in kind of some of the theory yesterday, but let's take a look at the 2-day, which will be closing today. Any kind of a closure below 18,901. So volatility has been declining, and we did denote that, hey, this is probably the end of the move as volatility begins to decline. And now, when we decline, you're going to get an opposite move, a mean reversion bounce in this case, and that got us all the way up to that 618 fib. Not only in NASDAQ, but on the 2-day time frame. So I'm just going to throw that out there again. That is the bull trap zone right there at the 618. Anywhere between the 0.5 and the 618, very, very likely those bull traps come in place. And now I would say on the 2-day time frame, any kind of a closure below 20,200 will at least give us a test back to the lows. And more importantly, what I want to see is volatility to continue to decline. And if we do get a cross down on these Stokes, that'll be a very, very good indicator that we're going to get some of those downside targets to hit some of the lower ones. And just if we're looking at more the medium-term time frames like a 4-hour, here's how I would be looking at this as clearly as possible. And you can see here, the 4-hour time frame, we got a big red candle with volume that denotes continuation, very likely. And I would say any kind of a 4-hour closure below this level here, coming in at, call it 20,600, very likely over time will give us a test back to the bottom side of the range between 19.1 and 18.5. And what does that mean? So, okay, so again, below this line, very likely going to come back down here in this zone around 18.8, 18.5. And then if we get any kind of a 4-hour closure below 18.5, this level right here, my next target is going to be at 16.3. And very likely these targets will bleed into the higher term time frames, which we've been talking about. So using the candle bodies, yeah, that does line up right there. So that 16,404 target could definitely be in play. And just as we rallied to the moon on the upside here in the 4-hour, kind of ruled that time frame, as we closed above this level right here. Actually, I mean, you might want to even say it was 20,100, but I was using the $20,500 level. This wick right here, actually, in fact, is what stopped me out. So 20,200. If we break back below that level, and that is the 618, and that would be where the bear trap comes in if the price comes down to the 618 and rejects and heads back up. However, any kind of a closure back below 20,200 on the 4-hour time frame, that is what's going to give us a shot back to 18.5. So I will just move that level down. Forgive me if you don't watch the whole video, but that is right there. any kind of a 4-hour closure below 20,200. Now, higher term time frame, if we get a daily below 20,500, I think that'll be good enough. In fact, a daily below 20,600 probably going to be good enough for me. And if you're a little more aggressive, you would take the 4-hour time frame. Needless to say, what was driving that market to the downside? Well, we were saying volatility was expanding, and it was expanding from the same region. Basically, we're expanding right here. And we got 4 bars of volatility. So that will kind of be the indicator that, hey, the move is probably coming to an end when BBWP, the volatility metric, gets up to a 100 percentile read and maybe holds there for, a time or two. What else do I want to point out here as well? And yes, closing below the bottom side Bollinger Band indicates trend is in motion. As long as we are closing below there, that will indicate a continuation on this move. In fact, this candle alone is telling me, hey, we could get a move as far down to this guy right here. And I know that's kind of a stretch here, but if the stock market continues to peel back and the dollar continues to rally and starts closing above this topside Bollinger Band on the 4-hour, call it 110, very likely we make a new all-time high on the dollar for the last 20 years. And let's just see, what else do we see here? From this wick right here, you can see these higher lows in place and several drives of hidden bullish divergence. So again, that's price making higher lows and RSI making lower lows. And that should give us a shot back up to, let's see, if we want to be conservative. Yeah, very likely we get a shot that revisits the high of 110. And then where do we go from there on the daily time frame? Again, the dollar has been the indicator to watch. Is the dollar is bullish, it's bad for stocks, bad for Bitcoin. Typically a very, very inverse correlation here. And there will be several drives of hidden bullish divergence coming back from this point right here. We'd have 1, 2, 3. That gets you a shot to the top side of the range. Is there any more? Actually, this would be 1, 2, 3, 4. And so at a minimum, I actually am looking for the dollar to head up to $111. Next target's 114. And let's see where that lines up on the monthly chart. And again, coming in on the 22nd, which is, about 2 weeks away, 23rd, 22nd, will be the Fed's rate hike. And on a more macro scale, we talked about it yesterday. If we're using candle bodies, already hit the first target right here. The second target's going to be 123 on the US dollar on the monthly time frame. We're well in the bullish control zone, and that could, if the dollar heads up to 123, you could see Bitcoin hit some of those downside targets. So I'll just go back over those, really starting out with that 4-hour time frame and what I would be looking for. So yeah, first stop at 16.5. Very likely, if that does happen, it's going to bleed into the higher term time frames, which is the 2-day and the 5-day and the weekly. And here's something very interesting: is the 5-day is going to be closed last night, and it closed up, but the stochastic or just about crossed up. Apparently, it was crossed up, and now it is crossed down. So if we can get back above 21.8, that'll invalidate some of these downside targets. But again, as I was saying, the weekly downtrend is still in force, and as long as we're closing below 25,000, so don't fight the weekly downtrend. The weekly is crossed up as of last week, but volatility has not begun to expand. So the 5-day is down. Typically, and it was crossed down from this level right here. So typically the move is about 42% to the downside, and that was giving us this target at 11,500. So I am expecting Bitcoin to come down somewhere between 11.5 and 10.5 in that region, especially if things really start to get going against us in the stock market. So just some ideas and areas to be aware of. Let's see, what does that do? If we move it up slightly. Yeah, any kind of a 5-day below this wick right here very likely sends you all the way down to 14,000. So this stuff can take some time before it actually happens. So just time to be patient and really mediate with the lower term time frames. Again, I think a good way to judge it is based on the 4-hour time frame. A 4-hour closure below 20,200, very likely we revisit the lows. Any kind of a 4-hour below 18.5 very likely sends us to 16.4, and I would judge it from there. That is, maybe some confidence, bear confidence. It's pretty undeniable what's going on here with the markets. And that'll be it for Bitcoin. I think I've spelled it out pretty much close as it's going to get. And I do want to check in on Ethereum. So apparently it was a buy the rumor, sell the news type of event. However, we're coming into this trend line right here. And I have been, pretty darn confident with the fact that, look, if Bitcoin takes it on the chin, Ethereum will as well. It doesn't matter what the merge is doing. What matters is what Bitcoin's doing, what the dollar's doing, and what the stock market is doing. Keep in mind, the stock market is still the big elephant in the room. $30 trillion market cap or a little bit more than that. That's going to move markets. Bitcoin is now at a $500 million market cap, or 400 billion. It's like a drop of water in a bucket, right? It's a very, small asset class. And I'm long-term bullish on Bitcoin. I think the market cap on Bitcoin probably goes from half a trillion to 4 or 5 billion in the next 3 to 5 years, alongside the price making new all-time highs. I do believe it is the life raft away from, financial terrorism, which is what the government's been doing to us for so long. Financial terrorism from the banks and the government. Bitcoin is the life raft long term. But in the short term, you have, in my opinion, play some of the trends here. So looking at Ethereum, by the way, if you've been following our channel for some time, we did hit on the 2-day time frame. We did hit our target. To the T I had a target of 1440. Because there is a premium over spot. It even hit it on spot price as well. And that was going based off of the 4-drive philosophy, what I would call the 4-drive philosophy, coming back from this pivot right here. We had 1, 2, 3, 4 drives of hidden bearish divergence. And where does that typically get you a move? Excuse me. That typically gets you a move all the way down to this pivot right here. So, excuse me. So the first target was 1380, call it 1400. Close enough is close enough. That's typically where you will get a bounce. And then the second target is actually to revisit the lows here at about $1,000. So as long as, we are closing below the 0.5, more specifically the 382 at 1823, I'm looking at this signal as a valid, and a fifth drive of hidden bearish divergence will be into play. Here with any kind of a closure here or lower, 1683 or lower on the 2-day time frame, which is closing in 7 hours. That would be another confirmed local high, and just multiple drives of bearish divergence, or hidden bearish divergence, so they call it. And that very likely first target, coming back down. Actually, you could probably just go like this and say any kind of a closure on Ethereum below 1427 on the 2-day time frame very likely gets you that move down to about 1200 to revisit some of these lows in here, or excuse me, these lower highs right here. And if you begin to see volatility expand as the stochastic crosses down, that's pretty much the perfect signal. And Ethereum is going to do whatever Bitcoin does, but more, in my opinion. Again, it's not financial advice. I'm not a financial advisor, but I'm just telling you guys what I'm looking at in the market. So hopefully it can be of some educational value to you. In the short term, we are getting a little bit of a bounce here, which is totally normal. Momentum is still to the downside below 1632. We got another 3 hours on this. So what is the hourly says? Bounce up to 1642. And that is typically what you want to see, is once you break a major level, like this level right here at 1650, you get a break and then you retest it. And then that forms what they call the cup. The cup, and then down. So hourly volatility is maxed out. So perhaps we even get a bounce as high as 1669. And really any kind of a closure back above, call it $1,700, and I would call it a bear trap. And probably something odd is going on with the merge. I had a dream last night. I literally had a dream last night. Somebody came to me in my dream and said the first block of the Ethereum merge, something went wrong. And I literally woke up in the middle of the night, went and checked all my cryptos and everything, and maybe it was just a dream. Maybe somebody was trying to tell me something. But I really don't think it has anything to do with the merge. I think it has to do with what kind of investment environment we are in, and that is risk off. It's a flight to the US dollar. And just curious, gold and silver are down almost 2% today. As the dollar goes up, gold and silver goes down. We might get the dollar to cool off here a little bit. We are testing that gap again. If we shoot through it, that would look... and we just got the first closure below the topside Bollinger Band. And again, something to know about the Bollinger Bands. When we close in above, trend is in motion. The first closure below is usually not the turnaround. It's usually the second or the third, depending upon the market. So I do want to check in on some of the bonds here and just see what interest rates are doing on the 10-year and the, let's see, what is the US 10-year and the 30-year. Let's check them out here. So bond yields rising here in this environment. Why is that? Well, when there is a flight to safety, actually bond yields should be coming down. when there's a flight to safety, there's more demand for bonds right now. So bond yields should go up. And when bond yields go up, it's typically not an indicator that the stock market is doing well. And this guy is at 3.25. Let's see where we're at in the macro environment here. So we did take out this high on the weekly time frame. We've got, that's close enough. Higher high, higher low, trend reversal. I mean, here was the trend reversal. This was the higher high, high above that high, and a higher low on the weekly time frame. And the weekly is a very powerful time frame, and volatility is ticking up. Momentum is to the upside. I would expect those bond yields to continue to go higher. And the same thing is happening on the 30 years. 30-year bond yields. I don't know why you'd want to put your money at 3.5% for 30 years when you can make that in a day on cryptocurrency, but apparently some people like to do that. And we talked about Brent yesterday as well. Brent coming down, which we said if it came down, that would probably help out inflation. And it very well could. Very well could. I don't know much about oil, guys, so I do believe, I think I said yesterday, oil very likely to head up towards about $100 a barrel off of these drives of bullish divergence. And this could be a bit of a invalidation point. So where would that get invalidated on oil, which is currently at $92 a barrel? I would say any kind of a 4-hour closure or a daily closure back below 91.68 is probably good enough to do it for me. And we at least come back to the lows. There would be one drive of bearish divergence. So, and that's between this point and this point right here. Maybe an additional drive right there. Okay, that's not fun. Let's talk about some cryptos. Let's look at what is melting down. Is there any opportunity in the markets? And sometimes what I like to do is if Bitcoin's getting slammed, well, some of these altcoins are going to get slammed alongside of it. So what do I look for is the ones that haven't bled it out too much yet. So ApeCoin, is there anybody aping into Ape? Are we getting any divergence here? No, not particularly, unless we're coming back from, nope, not this point. It'd be from this point right here, if you consider that a high. And, you know, for me, that's probably good enough to call it a high. And then we get several drives of bearish divergence forming if this confirms anywhere here or lower. And that should give you a shot probably to the bottom side of the range. Let's see, that's a high. That would be a high. So 1, 2, 3. And this... this point right here. So if we're coming back from this point right here, we're looking at 1, 2, 3. If you just call this a complex high, this is probably 2 highs, 4, 5. I mean, 5 drives of bearish divergence, yeah, should give you the shot to the bottom side of the range at a minimum, if not down to about 337. I don't see... you know, where would that get invalidated? Any kind of a closure back below above 590, and I would call it in fact, I would call it above 642. Otherwise, that is going to be in play for Mr. ApeCoin. FTM's really taking it on the chin in the macro, and I have been saying this one probably does the full retrace somewhere back here. And if you look at this high right here, there is a drive of bearish divergence. Price is making lower highs. RSI is making higher highs. We're now back below the exponential here. And what does the daily say? It's probably a very similar chart to Mr. Apecoin with the bearish divergence coming back all the way from this point right here, giving us 1, 2, 3, 4, and now 5 drives. Should give us a shot down to at least this low right here at 22 cents. And then the second target would be down to 19 cents. So let's just mark those off and maybe follow up over the next couple of days. And where does the invalidation come? Right above the prior wick. That's what I would say. And I'd probably mediate it with this wick right here, which is quite a far ways away, 27 cents versus 25 cents. So first target there, second target there. So kind of right in line with Bitcoin retesting its lows. I imagine if Bitcoin retests its lows, well, hey, we're going to retest lows on Mr. FTM, if not even more. It has been one of the weaker altcoins, and that's down 22%. Where would that take Bitcoin down to the lows from where we're at right now? Is it similar? 14%. So that does make sense. And notice here as well, a perfect trend line test of our falling channel, which this is going back here. We had this measure move stuck out. We said if we broke it, we probably grind it up against the top side of the range, or top side of the bottom side of the channel. And the measure move on this guy, did we even hit it? I mean, I'd say that was hit, right? Hit to a T, as a matter of fact. Came in right at 18.5. And what else? Okay, so what else do I want to show on the macro side really quick? Because we've had several of these falling channels. This one here. I'm just drawing these out really quick. Really quick, just to see how much confluence we're getting. That's not pretty. Where would we draw it from? Probably right there. I mean, that's close enough is close enough, right? So, and we had these drawn out way in advance. But, and I'm going to take off this guy, maybe put on the log scale, and just see how relevant this is. So apparently that does get us a move down all the way to 5,000 bucks. And it's still valid on the daily time frame. What about if we shorten it up? And there are a lot of people calling for that move. Somewhere down 5,000 to 4,000. But let's just draw a couple more flagpoles to see if we got any more confluence here. I know this one lines up pretty darn good. So almost to a T there. And if we break it again, oh, what do you know? That comes right down to our $10,000 target right there. So, you know, TA is not an exact science, more of an art form. Hopefully I'm giving you some ideas to be thinking about so you can prepare yourself for the next macro bull cycle, which will be denoted when the weekly time frame starts making higher highs and higher lows. That's what will turn me around perhaps and start to get me bullish again. And if you want to set up TradingView, there's a link in the description below. You can follow along our channel and ask questions about any coins. I'm happy to do them for you. Let's take a look lastly at Solana. Full retrace in place. That target we drew out a couple weeks ago hasn't quite hit yet. So I would say Solana probably has a good chance of coming back down. And that's probably right up there with that 618 fib. Yeah, the 382 and the 618 are, depending upon if you do a bullish or a bearish retracement, they're almost, they are the same thing, but whether you do a bullish or bearish retracement, that's where the bull trap comes in. And what else is happening? Well, I think you have a much more clear point of reference from that lower high. I mean, there's just so many drives of hidden bearish divergence coming back from this point, even this point right here. Did we ever take out that high? Nope. So we got 1, 2, 3, 4. 1, 2, 3, 4, 5. This will be 6. And I would confirm that with any kind of a closure below 33.98. Very likely we're going to revisit those lows and probably do a lot more damage. I mean, second target should be at about 11.37. So that is nice to know. What about XRP? All right, this is getting long, guys. I'm sorry to bore you to death, but I do want to check in on all the majors here as well. The market is moving quickly to the downside. And just quickly looking at this on the daily time frame here, any kind of a closure below 33 cents is going to turn momentum to the downside. And any kind of a closure here or lower will confirm this as another lower high. And in comparison to this high, we will have 1, 2, 3, 4, 5, 6. And I don't have any back testing for 6 drives of bearish divergence. But this would be the, no, that wouldn't be the 3 drive. Yeah, this pivot right here is going to give you those multiple drives of hidden bearish divergence, and that'll be confirmed with any kind of a closure here or lower, which should give us a conservative target of, first stop here at 32 cents, second stop at 29, and the third stop at 25 cents. And I think, again, if Bitcoin revisits its lows, that would be my conservative target for Mr. XRP. I want to see how Cardano is doing. How's my Cardano's doing? And look at this long descending triangle here. And a very long descending triangle is going to give us a nice measure move down. This is just using the daily time frame. A descending triangle has about a 60 to 70% chance of breaking to the downside as we're making lower highs. So where's the 50 percentile? Close enough is close enough. And a break below there is going to line up nice for a very nasty move to the downside. With the same multiple drives of hidden bearish divergence. Again, RSI is making all higher highs while the price is making lower highs. This will be confirmed today with any kind of a closure below the yellow 21 at 48 cents. And I would be looking for Cardano to do its favorite thing. Go down. Hate blow anybody's dreams up here for Cardano going back to $1, but maybe in the next cycle. I think in the next cycle probably will. However, this isn't financial advice. I'm not a financial advisor, and I want to see if this lines up with our, well, that's what it lines up with, is the max target. Yeah, so first target, 35 cents, and then the max volatility target, the 423, is lining right up there at 25 cents. And I do believe if we start to close any kind of a weekly below there, below this wick here at 40 cents, I'd be looking for that to get hit. And Cardano has quite a bit more to do the full retrace. But again, I'm just looking at the charts, and you do have two drives of bearish divergence on the weekly time frame, which should get you a move at least. Well, it's not confirmed. It won't be confirmed with any. You got to close the week below 45 cents. And that should give us a shot to the bottom side of the range at 40 cents. So a lot is at stake here for the cryptocurrency market, for the stock market. Those 401ks out there, people don't remember 2008 too well, but I remember it very, very well. And the 401k became a 201k. And I do believe we've been calling this on Cardano since this head and shoulders was out there. And I'm just going to measure it out again for kicks. And you got the silver cross to the downside. Very nice play all the way down. All the way down. And will we have any bullish divergence? I mean, perhaps that's not even a local low. That's not a local low. Maybe that is the low coming back here. So there's a potential, you know, if we start to break this guy to the upside on a weekly at 58 cents, you know, we can get a strong bear market rally all the way back to 85 cents and retest this wick over here. 74 cents would be the first stop to the upside. So it's not game over for Cardano. Just, you know, be aware of what the downside implications could mean and where some potential buying opportunities might be, some fantastic buying opportunities. I mean, this thing gets back. I remember when it was less than a penny. I had friends telling me to buy it. I didn't do it. You know, I'll be the first one to admit I didn't believe in it. Don't sign up for it. And I was wrong, I guess, apparently. But I wasn't trading the markets as I am today as well. So that would have been a good indicator when we took out this weekly high at 16 cents, making a higher high and a higher low, and probably alongside Bitcoin. Yeah, that was in 2020. Yep, I remember that. And I should have jumped on the party for that one all the way up to $2, you know. So I understand why some people are enlisted in the XRP army and the Cardano army, but, well, not Cardano or XRP army, I don't understand it. But when you're making new all-time highs in a bull market, you know, Cardano was doing good. So volatility is extremely low and will cross down this week below 48 cents. And if we do cross down, that'll all be but confirmation for a massive move down in Cardano. Okay, that's it for today, guys. I'm going to wrap it up. Thanks and take care.